Hi everyone, this is Bag of Dawn. It is March 11th at about 10 minutes of 5. I'm making this video both for our members and for the public. To our members, please be aware that our Sunday night weekly video was posted yesterday, so that is there for your viewing. For members today, I apologize for the quality of this video. I wanted to upload it to the public, and as you know, the quality of the YouTube video versus the video that we usually provide you is lacking. So, but the information I think is key, and we'll come back and talk about this with our private members during the coming week. For the public, please understand if you're watching on YouTube, I think you'll do better to set it in high definition. Also, please understand the videos we provide our members is 100 times better than this the YouTube video. In an earlier video or two, I've been trying to address the subject of perspective in trading. And I did this with one or two videos. I don't hear people, well, I hear people talk about trading with perspective, but I don't hear them telling you how to do it or what it's all about. And I think it's critically important. And I'm reminded of that perspective in trading when we got what we got last week. I think that if you tightened up your game a little bit, get to a three-dimensional view of the field, you're going to do better. Think about it. We see what we see with two eyes that gives us depth perception. We see in 3D. Intuitive Surgical, that makes the robot for surgery. One of the key aspects of that equipment for the surgeon is not only does he have a camera that is inside the human body so that he can see the anatomy. That camera is in 3D. He gets to see inside the human body with 3 dimensions. So I think in your trading, if you can just take a little bit more time, a little bit more thought, and develop the tools to see your trades in 3D, you're going to do much better. Now for our members, let me share with you how we are doing this. And we've also, for our members, we're making some adjustments for the coming week. What you're looking at is our intraday view of the swing machine. And our full-time traders look at this day in and day out. What we're adding this week is all of the key indices being measured in 60 minutes. This is what's going to give us our depth. And you can see how the swing machine is positioned on the VIX and on the markets, when they actually went long, what time, and also we're getting a depth reading on the strength of the trend. And you can see how much money up or down you would be. But the time frame that we trade for the most part is here, measured in transactions. And what we need to do a better job of intraday is going in the direction of the 60 minute, particularly when it's solid green. So when we see a short pullback come out, we'd be inclined to wave that off and want to go and wait for the buy signal to go in this direction. If this direction is short and it's all selling off, same thing on this tighter view, we want to go what we would want to be going short. This is how we can see the charts without actually looking at a chart, how we can process all of this information and determine whether or not we want to be going long or short. We're actually seeing the chart in 3D. Now, the human mind can only take in about 4, and it's been studied by psychologists, about 4 factors. So that's why we have the swing machine. And so it takes in much more than 4 factors, but really you only have to take in 1 or 2 here and let the machine do all the hard work, all the setting the definition, and all we have to do is react. Now I want to show you on a chart what this might look like. On a 1 hour view of the ES, we went long at 11 a.m. on March 7th. March 7th. So that means on March 7th, which was Wednesday, Thursday was the 8th, Friday was the 9th, our 1 hour depth perception was saying to go long. Okay? All we should have been doing is taking long signals off of the radar. But let me show you what this would have looked like. And I'm going to show you a chart that's probably strange to most folks, not to our members, but to the public. You are accustomed to looking at time, and time distorts your view. And here, granted this is time, this is transactions, an entirely different plane than this. But if you do have a time view, you're not going to really get the depth perception by going merely from a 60-minute to a 5-minute. You would be better looking at your time chart on an intraday view if that's what you want to be. And you need to, another big part of this perspective, you need to define the perspective. If you're an intraday trader, then yes, you probably don't want to go much larger than a 1 hour time frame. If you're going to be a daily swing trader, you might want to broaden it to a 4 hour. But even that hourly chart, needs to be matched with what we feel is most accurate would be a time chart. And I'm going to show you that in a moment. But the other comparison, when we talk about perspective, I've used as an example a microscope in changing the lens from 50 power to 100 power to 200 power. If all you're doing is looking at the market in 1 power, you're not seeing enough of the field to give you that depth perception that you need. Same is true if you pull up to a scenic vista and you look at the beautiful mountains in front of you, you have one view. If you then pull the binoculars up from your chest and take another view of the mountainscape in front of you, you have another. And it's that ability to process the two together that gives you that three-dimensional. Now, if you don't have a tool like Stock Market Caddy, then you got to do some processing in your mind, and you got to do some hard thinking about what it is you're doing. Otherwise, you're just flinging shares and flinging contracts around. But let's take a look at this time. If the ES contract here on a 1 hour basis went long on March 7th at 11 a.m., let's go to a time chart and see what we see. Okay, this is a Renko chart. Now you need to know what Renko charts are all about and how properly to set them to give you your view. But I want to show you. This is March 7th at 9:30 when the market opened. This is March 7th right at about the time when the swing machine was indicating on an hourly view it was time to go long. It precisely went long on this price chart right here. March 7th at 14:12, which is actually a little in the afternoon. And then look on the time chart. Did you do any shorting on the 7th of the S&P? Did you do any shorting on Thursday, the 8th? Did you do any shorting on Friday? Why? It was a long all the way. It was a long on the 1 hour radar. You were getting long signals on the intraday radar. But if you didn't have that and you're not a member, if you don't have a time chart, you could have bought a call on the S&P at 27.10. Could have bought another one right in here at 27.30. Another one right here at 27.45. 27.50. Call options going long. Folks, you need to think about what it is you're doing. And if you can't see the field, if you can't tell up from down, then you need a coach, you need a mentor, you need someone to help give you the proper orientation. And that's what we do for our members. We want our members to see the field in 3D. They trade with precision. I'm Bag of Don at StockMarketCaddy.com. Feel free to check us out. Better yet, feel free to follow us for a month. Can't promise you that you're going to make money, but you will have fun, you will learn, and you will see the markets in a way that you've never seen or thought of before. Don't be just throwing shares and contracts around willy-nilly. Good luck.